Hi, Chris Malouf with XCountry Mortgage here. Going to do a quick educational video on waiving escrow and what that means. When you escrow, you are adding your property taxes and your homeowner's insurance to your monthly mortgage payment. And I'm going to go through some pros and cons on that, what that actually means. A lot of folks don't quite understand how the escrow process works, and maybe give you another option to take a look at. So when you apply for a mortgage or on your mortgage loan, there are four components if you escrow. One is the principal, one is the interest, one is the taxes, and one is your homeowner's insurance, sometimes called PD or sometimes called PITI. The principal and interest, those are the only two components that are actually affected by the loan terms. Basic terms, the principal is the amount of money that you're borrowing that you have to pay back, and then the interest is the cost of borrowing that money. The taxes are actually dictated by your county assessor. They come out and do an assessment each year, said this is what your property's worth, here's our property tax rate, this is what you owe each year. And then of course your homeowner's insurance, that's dictated by your insurance company. How much are they going to charge you for a premium? So again, the principal and the interest, those are the only two components. If you're escrowing, they're actually affected by the loan terms. The other two are dictated by third parties. So when we escrow, we make one monthly payment that includes all four of those components. If we were to waive escrow, that means when we make our monthly mortgage payment, we're just paying the principal and interest, just those two components. And then we would be responsible for paying our property taxes and our homeowner's insurance directly. We would pay those ourselves. And there's some benefits, there's some pros and cons to both. Two of the cons of escrowing those two things. Number one is dependent upon when your property tax bill is due and dependent upon when you take out the loan or refinance, lenders are going to require that you escrow a certain amount of money to establish that escrow account to make sure that the bill is paid. So let's keep the math simple. $200 a month. The lender requires 6 months worth of escrow. There's $1,200. If your homeowner's insurance is $100 a month and they require 6 months of that, there's $600. So now you've got a total of $1,800 that you either need to bring to close or you have to bake it into the terms of the loan. And if you bake it into the loan, number one, that's going to raise your payment because now you're paying interest on that and it increases the loan amount. And then again, also you're paying interest over the course of that loan on that amount. So 15, 25, 30 years, whatever it may be. Now, the other downside of escrowing those things is your lender is sitting on that money for 6 months to a year, earning a return, albeit maybe a small return, but they've got control of your money for 6 months to a year, and they're simply a pass-through. So they're sitting on your money. So if we waive escrow, that means we're going to be responsible for paying our property tax bill and our homeowner's insurance directly. And then we just pay the principal and interest to our mortgage lender. We take out that middleman, so to speak. And I'm also a financial advisor. So depending upon the client's situation, I take off the mortgage broker hat, put on the financial advisor hat, and say, hey, each month, let's put a little bit into an account, earn a return on it in an appropriate investment vehicle. And then when we get our property tax bill, we just pay that directly out of that account. Okay. So another thing that we've run into, and I've got a couple calls on this from some clients, is real estate has appreciated so fast in the 18, 24 months that they're receiving letters from their lenders saying you actually have a deficit in your escrow balance. So you owe an extra $1,600, or I had one client owed an extra $2,400 to escrow because the lender they were working with was not escrowing enough each month and they had a big deficit. So you either have to write a lump sum check, or most lenders will allow you to stretch that amount out over, say 4 or 5 or 6 payments. But then once it's caught up, once that escrow account is funded, now your payment's going to be higher with that bigger property tax number in there. So again, the pros to waiving escrow is you don't have to bring that money to close. You don't have to bake it into the loan. You can keep that money under your control, maybe make a little bit of a return on it. The downside of waiving escrow is, a lot of folks, they just want to do it as a matter of convenience. They say, I just want to write one check each month to cover my mortgage, cover the property taxes, cover the insurance. They don't want to be responsible for paying the taxes and insurance on their own, which is fine. That's a personal preference. But a lot of folks don't understand you actually have the option. You can waive escrow. You do not have to escrow those things with most lenders. Now, another thing to be cognizant of is some lenders will actually charge you to waive escrow. The lenders I work with do not, but just be cognizant of them. If you ask about waiving escrow when you're going through the loan process, ask them if they're going to charge you a fee to do that. Okay, so that's a little on the shady side if you ask me, but some lenders will charge for that. So hope this information was beneficial. Feel free to reach out with any questions in the comments or via email. I'll be happy to answer that. Give us a subscribe, give us a like. We're going to post a lot of educational content in regards to mortgages, in regards to finances in general. Hope this information was beneficial, and have a great week.